Hello guys, how are you? Welcome to tonight's lecture. I'm gonna wait for a couple of minutes until 8 that everyone is connected. Let me see what else do we got on the chat. I'll put the chat right here so we can see it. Hello guys, hello Adam. Hello Bobby. How are you guys? You're all mute. You can unmute yourself if you want to do questions. But at the beginning, everyone's muted, so we avoid having any trouble with any open mics. How was your trading day today, guys? You had some fun with the volatility today? You presented some good moves today. Can you all hear me well?
Yeah, we can hear you.
Yep.
Thank you. Just want to confirm that my microphone is working properly. And let's see what else. Who else do we have here? Hello guys. Hello everyone. John, you're driving in the space. That's nice. Hello guys. This is going to be a lecture on we're not going to go into depth on how to calculate the EMAs and SMAs. I can show you more or less how it's done, but most of the platforms today they do it by itself. So I just want to try to make you understand how do we use them for day trading and what's the difference between EMAs and SMAs and how can you adapt to each of them and how we will use them for your benefit on day trading or for longer investment. Adam, you didn't trade in the power hour because you were happy with your gains and watch from the sideline. That's pretty smart. That's there's nothing more satisfactory like end of the day green, and you don't need to risk it at the end of the day with some risky trades or FOMO trades. So if you were done at the first 2 hours of the day, close your computer and do something else productive. That's as I always say to everyone, over trading, it's your kind of your second worst enemy in trading. The first one is being impatient. But over trading, it's part of that. So be really careful with that. I'm gonna allow 2 more minutes until it's 8:02, and then we start, guys. I don't like to get too deep into concepts and definitions. I'm gonna explain the basics so we know the difference between how do we use the EMAs and SMAs, and then we're gonna go to some samples. I'm visual, as I always say it on the lectures. So I like to go into the charts. I like to open the microphones and see different names that you traded today. And hi, Rudy. I'm doing great. Thank you. Great Monday. Great Green Monday to start the week and all day. I'm a bull. I don't know why people would like to see the markets going down at all because everyone has their IRAs and everyone has their long-term investments. Everyone wants the market to go higher. So it's okay to have some adjustments in the market, but yeah, flips in the morning kill it. And for those that were on the last 5 minutes of the day on the SPX, those XPS were incredible. They were for $40 all the way to 400. And I sold it like at 450. It ended up being at 700. So from $45 to $700. That's SPX. And yeah, that's the magic of flips. You always get in at the right time. All right, 2 more minutes, guys, and we're done. And it's pretty nice that everyone is here. Thank you for the company on a Monday morning. I know that after trading and being sitting in the charts for the whole day, sometimes it's just, you don't want to stay and watch anymore. But this is really useful because this is going to help you out how to see for yourselves how do we use this. So 8:01 on the clock. Let's start, guys. So as I said, I'm not going to go too deep into concepts. I'm gonna go in more into visuals, but we need to know the basic differences. So a moving average is just a tool from technical analysis that we use to identify trends and potential opportunities. Very simple. We all know the lines. We all know that there are different type of lines, and we use them in a couple of different ways. They help. What they do is they take, if you're trading on the simple moving average, the 10 or the 21, you grab 10 clicks or 10 of the last candles, and you add them and divide it by the number of candles or the number of the EMA that you're using. That's on the simple one. And every time there's a new candle, that price it's getting into that addition, and the last candle gets excluded. So it's moving with the price action, and that's why we call, and you need to remember that all indicators are lagging indicators because they are based on the price that it's already happening. So it's just you just need to remember that is a reference, but you cannot use them as your only mean of trading. The basic difference between the simple moving average and the exponential moving average is that the simple ones are weighted exactly the same. Like, for example, if you have a 10-day SMA, it's going to be divided by 10 days for that 10 prices or 10 clicks average. If we have the exponential has a different formula that is going to weight more on the latest prices. So, and on the charts, we will see how normally you will use for certain time frames the exponential EMAs, and the simple moving average, you can use them for a different time frame. And that's going to be the sum of how do we use them and how do we use them. I don't think you want to go into the math of anything, but if you want to go into the math of the EMAs, then you have to make an extra formula and divide the 10 days, for example, and then divide that by X minus 1 divided by the number of days. And that your formula, that's how you're going to add the latest price to be more weighted on that side. But as I said, we all have them on our brokerage, even Robinhood, Webull, all of them have them by themselves. We don't need to calculate it. So, but we need to be aware of what it is and why using shorter term, either simple moving average or exponentials, are going to be for shorter term trading, and the longer are going to be used for longer term. So we have different uses. I'm going to cover like 4 different uses that we have for the EMAs and the SMAs. The principal uses are, how do we identify pullbacks, trends, and reversals? So that's why, how do we use them? And by using those, we have different ways of identifying these uses, like crossover signal. When using SMAs, the shorter SMA is going to cross above a longer term SMA, and that's a bullish signal. When the shorter term, and then indicating a potential uptrend. When a shorter term crosses above a longer term, it's supposed to be because the price action is going to be closer to the SMA. And if we're crossing a longer SMA, it's going to be a bullish signal. Same thing if it goes down. That's fairly simple. If we're seeing that one of our SMAs is crossing downward a higher SMA, that's a bearish signal. The EMAs is the same thing. The only difference is that they're going to occur earlier. And we're going to see that on the charts. They're going to be a little bit more close to the real price action. And that's how we're going to separate for what we use the SMAs and how do we use the EMAs. Then remember, again, they're lagging indicators. So while they're a lagging indicator, the data on the SMAs is going to be weighted equally on all the last candles, but the EMAs is going to be compared a little bit different because it's going to weight a little more on the latest price action. So this is a little bit of the same. How do we use them? EMAs, shorter time frames, fast moving market. That's why we use EMAs. SMAs are recommended for holding a position for a longer period of time and to filter the noise out. So if we're investing and I want to see what my portfolio is doing, and I would like to see if there's a good time to buy, I can use an SMA to know where to buy the shares, where do I want to get out of those shares. And normally on the SMAs, we'll use the 100, the 200 SMA. The EMAs, I like to use personally the 21 and the 50. 21 and the 50 are my favorite because the 9 is just too close to the price action, and it, even though it might be helpful for scalping, because I will show you that we can do some intra moving average scalpings. I'm more of a day trader, so I like to trade slower moves, more candles, a little bit more of time, and I will go through when my 21 price action goes into the 50. So that's the way I like to use it. But this is a common period. Normally, they use the 10 and the 20 for short-term use, 50 midterm trends, 200 and 100 for longer term. So this is fairly easy, but this is the main reason why do we separate them. And if you use TOS or other brokerages, you can separate that on your style. So under the same chart, you can change like, what do I want to do right now? Is it time for, it's very volatile. I want to just scalp something. I will pull up my EMAs. If I'm looking for, I want to keep a 2 weeks position. Let's see what I get for my longer port. I'll pull up the SMA and then I'll see where my SMA is doing. Even the one that I always recommend, the daily SMA, it's gonna pick up not the last certain amount of candles. It's gonna take days. So the 200, the 300. So it's gonna be days, and that's gonna give you a longer perspective on what the move is doing on that certain ticker or that certain name that you're watching. So, but as a summary, a moving average is just a simple technical indicator that calculates the close of a price of a particular ticker on a particular period of time. So that's fairly simple. That's the only thing that we need to know. We need to be organized on how to separate them, and then we need to be aware on how to use them and how to visualize how we're going to use them. So as I said, I'm not going to go deep into definitions. Someone writing on my chart. That's okay. I don't mind. Risk and rewards. The SMAs are very suited for traders, again, with longer term perspective who are willing to tolerate more fluctuations. EMAs are for traders to capitalize short-term price movements and are willing to take a higher level of risk on potential higher rewards. So be aware when to use which one. And the choice, as I said, this is not, the beginners should experiment with both types and see how they go. I'm going to go to samples because, as I say, the definition is nice, but I like to see it a little bit more here. This is a chart that I'm going to bring back up, but this is just a hold of a chart of Apple that was as of yesterday. And you see an SMA, the blue line, it's the 20, and the yellow line is the 50. Here you will see how the difference on the space that we have within the price action and the price action on an SMA is going to be compared with our moving exponential. The 9, it's very, very close to the action. Here, the SMA is going to be a little bit further, and then we have space, more space within one and the other one. And we will see more in depth into that. I think someone wrote by mistake there, so let's see if I can do this. So there you go. I don't know how to take this out, so that's fine. So this is just a little sample that I have on the on our charts. If anyone knows how to take the little yellow line that someone wrote by mistake, just let me know in the chat, please. I never erased anything on the chat. But this is SPY today that I did this little chart, and I wanted to do it live so we can see how it moves and how it goes. And what can we see here? We have the 20 and the 50, and we have a nice move. We have, so we know that one of the reference that the EMAs are going to tell us is the trend. So we know if we base on the yellow line that we are above the yellow line is going to give us the upward trend. Every time that we are on top of certain EMA and we're holding that level, it's upward. So we know this is one of the different ways of how do we use them. So this is going to be one way, and then we know when look at how the price action was on top of the yellow line, and then we switched and we crossed, and then we are below the 50 daily. This is the 50 EMA. Now we know that this is a downtrend. So that's the first thing that we need to know, and like don't get confused on how to use them, because sometimes we have those lines and because everyone uses them and we don't know how to really read what's happening. So look how the 20 here, the price action is pretty crappy. It's going up and down. It's not really giving me anything. So I go to the 50. The next price action is going to give me a clearer price action, because here if we take only the 20, we might see that, oh, we got coming down, we're going up, we're coming down. No, look, we're smooth going up until we have this guide and this reference to switch that now we're going on the downward. And always remember, we always gonna try to play this out with our levels or our trend lines. So I'm just doing this with the indicators for the purpose of the samples of how to use the lines and the reference, but we always gonna have our levels that they're gonna help us on reference when to get in and when to get out. The EMA, the yellow line is a 50 and the blue one is a 21. So here, this is another way on how can we know if the movement that it's happening, it is a big movement, if it's a steep move or not. Sometimes we use an angle. So we can use this type of angle. If we have a straight angle here and we go and we have this little angle, then this side, we know how steep and how aggressive that downtrend can go. And this is just a little way. This is very helpful just to know, like, hey, is this a mild change from the trend, or this is a very, normally if it's a 45 or close to 45 or more, this is a very, this is a change, like a really change. Like now the trend, I need to get out of all my, call positions here and see what's going to happen here in case of, if this were to be the 100 or the 200. So this is just a visual way on how can you be a little more aware of where that position is going to go. So let's go to, so that's how we calculate the slope. So 50 EMA, 90 EMA, and then we have the crossovers. Normally, the crossovers are going to tell us what's happening also with the trend. So we know that the price action is coming down, but when we have the smaller time frame EMA or SMA crossing on top of a higher EMA, we know that there is a change of trend. These movements are movements that you need to be aware of. If this was going to go up again, then we have, and again, we're going above the 50 EMA and then another change. This probably is going to happen tomorrow because, as I said, this is today's SPY chart because I wanted to make something current and interesting. But this is really something that you need to be aware and gotta be careful not having too many. Like I've seen charts that they have all the EMAs, and it's very confusing to try to see which one are you using unless you are very, very in depth and zoom into the chart. So these are some of the most basic things that you need to know. So now we know with the EMAs where the trend is going. We know that if we keep the price and it's crossing below my SMA or my EMA, that I have a change of trend. I know that I can calculate the slope of the change of that trend, if it's an aggressive one or if it's just a mild one. And I can use them, and the last way of how do we use them is as a dynamic reference or a dynamic level. Why? Normally we have our levels, as we're gonna see on my chart. We got our normal levels going like this. But if we see them bouncing and bouncing and bouncing in one EMA, that's telling me that that EMA it's becoming a very good support, and then that I can base myself on taking more trades on those. So I'm gonna go change to my charts, and from there we're gonna go to have a little more fun with how do we see that. So I'm gonna go here, and now you can see my chart here, right guys? Let's see where you are. Okay, perfect. And perfect. So this is today, guys. Look how cool this is. This is what I like to, I mean, I like the definitions. We know how to use them, but nothing like real charts. And if you have any questions or any names that we want to work on, we can do that afterwards. But look at this. This is what I try to reference on my other chart. Look how this, as you can see here, I got my exponentials 9 and 50, and I got my simple 9 and 50. So this is super nice because I can see, look at this move. I know that it's pretty, like we're holding the 9, we're holding the 9, we're holding the 9, we're holding the 9, and then we cross the 9 over the, and on the, my sample was a 20 because I have, normally my charts are blue, but this, for the purpose of the sample, you will see that this is the 9 breaking the 50. And one of the things that we can use is a shorter time frame EMA or SMA with a bigger one like the 9 and the 50, and we can use them as different references for these crossovers. So every time that we have a crossover, you will have now the 9 has to reach the 50 above, but then when we cross off, now we have to reach the 50 back. And this is gonna set us, look at the entries here. You could have, when you see a separation here, you can go up. Then when this moves on the cross going down, then go up again. Then when we see this coming down, again, we have another little scalp that we can do here. When it sets above here, look at this cross perfectly here. Look where it goes up, 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 and it keeps going up until the end of today. So this is a ways that it's very, very interesting to see how these guys work and how do we use them. So I like it SPY today because it gave us a harmonial move on how can we see the different reactions to it. So don't get crazy on having, thousands of EMAs and you don't know which one is going, because remember, we're going to have things like this now. Like if I'm here, I'm going to have this, I'm going to have some resistance somewhere around here, and then I'm going to have probably something like this somewhere around here. So how do we mix now? I know that, they got, look how, I know that my level, when it breaks here, I know that I can take some puts. I got to be careful here if I'm on my longs. I take puts right here at open because I'm resisting this level, and I'm resisting, it's not going above this. Puts all day here. So you can read it, and we're in the 4 hours. Like if we go to the 5 minutes, it's going to be a little bit nicer. I'm going to try to go here and here so we can use exact same reference. Look, how do we see, like, you see how we have the 9 being a little too close, and it's maybe not as the best reference as the 50, but we can see every time that we touch the 50 here, and we can see it on, let me adjust this chart to be exactly like the one on top. There, you see, look at the cross action here. And resistance, we try to break it, never had a candle breaking it. We hold it, and above we go and stay on top of the 9, top of the 9. And when you start breaking, you know that you can get out and then never touch it again. Beautiful reference. And then it's getting closer together. And here on the simple, they're getting close. So it's really interesting to see how you can use them. Rudy, so when it gets under or over the 9, is the first signal? Yes. But for me, I like to use the 20 a little better. I'm using the 9 because it's a very, very nice visual reference. But let me change this. I'm gonna take this away. Let's make it the 20. I'm gonna make the 21. I'm gonna make this one the 21. I like to use this too a lot. This is my favorite ones because here you see at open resistance, resistance. Then when it breaks down, I look to stop at my next level. So you can start using this having as a dynamic reference. I'm not using my my normal levels here with the price action. I'm just watching where are they holding, and if it's holding the 20, it's holding the 50. The 50 is a very strong reference here, so I really like that. And we can see them like when we go more into only one action. Like if we go, for example, here to the daily, look how the daily looks amazing here. Look, if you're a long-time investor, look how we cross over right here. It crosses up, we hold, we touch, and then we know we can add here and again, and then only here, it's well, we cross. So this is a beauty. But if you go to the exponential, we will see that we have the price action within them. It's a little bit closer, but this one is a beauty here. And you see how we respect our levels, respecting our levels, and we can grab them below. So every time that we are above the smaller time frame that we're using, we're upward trending. If we are below, we're downward trending. And if we have EMAs or SMAs breaking from one another and crossing over, that's a change of trend. So it's gonna say, I don't use the 9 that much, Husky. I use more of the 20. I use the 9 when I'm scalping. When I'm if I will go, for example, here, and I'm on the 2 minutes, and I will do something like this, and here I will add I got my 9 here, and I will go very deep like this. So here's where I use it because I want to see like the difference. See, here's my 20, here's my 50, this is my 20, fit my 9, and I will go to see like what I was telling you is like we got some traders that they like to trade intra EMAs. So they will grab calls here and sell on the next level. They grab calls here and sell here. They will grab puts here maybe and sell here, depending on when they are. They will grab puts on the 50 EMA here and then sell at the 100. So those are ways that you can use them to. This is our 200 simple moving average. This is our 50. I have them all. Let me just not confuse you with the colors on here. Let's adjust these colors the way it should be. This is a yellow one. The 20 is here, and this yellow should be white. I always use the same colors. So here are the difference. So we have the 9. So Husky, when I'm Bobby, sorry, when I'm on the 9, here is where I use this only when I'm scalping this way, because I want to see that if we're going with it and if we're crossing it, look at all these cross from the 9 here all the way here. So this is a strong move if I'm scalping this last move here on SPY today. And this is where we got the SPXs, all this trend here, boom. But normally I can go with the 21 and the 50, and that's going to give me, like, if I go to the 5 minutes, and let's see it here. And if we go to our 5 minutes and we see any other chart, not SPX, let's see Apple. On my charts, go to my flexible grid, and I got Apple. You'll see here, same thing again. Let's see how these levels here. So I will go very, very zoom in to see what's happening with my price action. So you can grab here, for example, from this 9 all the way to this 50 and scalp this move. So I don't have any levels here right now because this is just my paper trading account for reference. So that's not how my is not completely set up this specific, because I wanted to use this examples for what we're saying and what we're using. 30 minutes, 30 minutes. But you can get the idea. Look how nice this look on the 20, you see? So the 9, I use it if I'm really, really scalping, but look at the 21 or the 20, how beautiful this, reference you can use. And if we were doing swinging, grab your calls here and let them run. No need to panic anywhere. You can keep just scalping and trimming, and let it run and let them run. How do I use the SMAs and the EMAs? I use them if I'm changing the EMAs, I will use them for the shorter time frame, but I can have here, if I go to the daily, I can have my SMA right here and add a simple moving. I can use my simple moving average here. I'm gonna add it, and I'm gonna use the 100, and I'm gonna put it green. So for longer time frames, I can use my simple, and it's gonna be a different reference because it's just gonna be smooth. Where here's where we broke. I know that I can get in here on my SMA, and then I will follow the price action of my EMA. So for longer, that's for swing. This is how I mix them. Or I can have just a chart with only my EMAs and my SMAs. Like if I add here the same simple, I add it here, I'll go here, I put 100, and I'll go to green. You see, look at how this price action here, and I gotta go to the daily to be exactly the same on top, but look how the price action goes. Then look at how the difference on the exponential is. Look at this move, how it's a little bit lagging, it's slower to close. Look at the space within these ones. They're all a lot closer than this. So it reacts a lot faster than these two here. So if I'm looking for longer term, I can use my SMA here and then just trade on scalp or trim out of my EMA. So that's the same way as I use my my daily SMA. And my daily SMA, it doesn't trend like this. My daily SMA normally goes like this. So if I trim this, and I will go to the daily SMA, which is the one that I use for my longer trades, 100, it's gonna be green. Look how you have this line here, and we're holding right now. And this is a great example. Look at where SPY is holding, and we're pushing back from there. We did already, got out, we went down a little bit and up. So this is great for how to see and forecast the market on where we're standing. So if everyone jumped into SPY calls yesterday or today, we need to know, like, where are we? Where are we compared on the longer term? But if I go here to my 30, look at where that 100 daily SMA is, and I want to follow these ones here because I'm scalping, I'm trimming, I'm day trading. This is just going to guide me. Am I getting crazy and buying puts here, or I have room to go down, or I have room to go up? Where are we? So you can set up your levels a lot better. Let me see here. I'm allowing you guys to unmute yourselves. So if you have any questions, and if you have more names that you want to go through, let's do them. Because if you have any doubts, please let me know, because there's no more go more into the definition of the EMA by itself, because what we know is that we see these lines going up and down like crazy, but how do you make your lines and your indicators be the reference that you need for entries? So we can go and try to see them with different names if you want to. If you have any troubles today with a certain name, let me know in the chat so I can go with that. Yes, iPhone. I don't know who this iPhone name was, but SMAs are used for longer term trading and EMAs are used for shorter term trades. If you want to do day trade, scalps, or you want to do something quick, EMAs. If you want to go for easy day, longer term, maybe just a swing or anything, you can use the SMA. It doesn't mean, I mean, I use the EMAs most of the time. I use a daily SMAs for my longer time, for my time frame, and I just use the EMAs. You don't. There are so many indicators in trading and so many things that really you get to simplify your life. Which ones are the you gotta try them, because I have members that they have the all EMAs, they have the Bollinger Bands, and they have certain more indicators, and when you try to read your chart, it's impossible. So I try to be simple, guys. I have two charts, one on the left and one on the right. My left side has a longer time frame with my daily SMA and VWAP, and my right side have the EMAs, and that's what I trade off. And if I go to my active traders, my active traders all look with different time frames and different lines. So, but that's how I used to have mine. And when you say you use your daily SMA for longer trades, longer is how long? A couple of weeks. Everything, Bobby, I use everything from 4 hours and higher than that. I like to see it on my daily SMA. Look, and even you can use it like if we're very close to it and you are in the 5 minutes, it's gonna be a great reference. It's gonna give you a level like this. Like if we were close to this, you will see it right here, and you will see like, oh, this is a strong hold here. I mean, I'm not gonna try to buy puts here unless we break this level. Like this level here is super, super big. But I just wanted to, everyone understands the difference between the EMA and the SMA and the EMA? You see how they react a lot faster and closer than the EMAs. So now the idea with this is that you can, like, depending on what you're going to use, you can have different styles. Like I have it, for example, I got it on my drawings, I think here. Yeah. My drawing set, I have the 21 EMA. I got, I think I have that here. No, I got it on my style. Where is it? My drawings, studies. Here, I have on my studies, I can use 21 and 50 EMA, 21 and 50 SMA, just the 21, the SMA, the 9, the 50, and the 200, B1s, BWAP only. So you are able to switch. So I just want to use the BWAP, that's it. And this is going to be the VWAP on the 4 hour. And then I use this one to see if, where are we compared with the VWAP? Oh, we know that we use the VWAP the same way we use some indicators. VWAP, when we are on top of the VWAP, it's a upper trend and we're going higher. We are below VWAP, same. It's an indicator that we're going lower. So you got to use this plus your other indicators is going to help you make a reference on when you need to get in, when you need to get out. So sometimes I don't like to have them all in one screen. The SMA, I use them for when we have longer and slower moves. Like if you're using if you don't have a day that with a bigger move like today, or if we're trending sideways, you can use the SMA to trade, and it's really easy to use. Here we go. Look at the difference. SMA reacts. Look at the space here between the space that we have. This is a 4 hour. Let me put it on the same time so we can kind of see the same. This is SPY and SPY. We might be a little like boom, boom, boom. Sometimes what you see is like there is a difference on this react a lot closer, these lines, to the price action, and even though this one is in within, the reaction of these SMAs is slower than the reaction with the price trend that the EMAs have. So that's why we use them, SMAs, and I can jump back to my, I can jump back here and here. EMAs are going to be EMAs, shorter time frame, fast moving markets. SMAs, when holding a position for a longer time period of time, or to filter the noise out. And you want to try to figure out where you're going. Common time periods, 10, 20, 50, and 200 terms. You can, of course, use the 100 and the 9 and the 21. It's the same. Like sometimes I use the 3 minutes on my charts instead of the 5 minutes or the 2. I just settle for the 3 minutes and I can scalp out of the 3 minutes. So it's up to you guys. So, and here's going to be the difference. This is what it's going to give you. Upward trend is you're going to identify every time that you're on top of a indicator, you know which trend are we doing, so we can explore the trend and we can know if we have what the slope is. If the slope is very aggressive, that's a big move and you need to get out of your positions. If the slope were to be a little bit smoother, then you might, wait and see where we're going next and then go for the next one. And normally the 50, normally the 9, and then always gotta watch for your crossovers. Every time we have a smaller time frame crossing on top of a higher, that's a change of the trend. You need to be careful, probably trim or get out of your call positions if you were on the bullish position, and then you can switch or wait if the move remember, we can go up and down several times. So that's where you need to see the bigger time frame and see, like here, if we were to zoom in, we will see that, oh, we're going up, we're going down, we're going up, we're going down. But if we zoom out a little on the 50, we'll see that we'll never move. We're just going up, up until really here. This was the move. So you got to be careful not being faked out by the time frame that you're using and the indicator that you're using. So you can always go to your next time frame or next indicator on the higher time frame and then see like, okay, no, nothing happening. We're just oscillating up and down within this one, but we're just trending up, and nothing is happening. So no need to worry. I don't need to get out of my position until here. So always something that we need to do. Let me go back to our charts and let's see some names that you were asking, guys. Let me see here. Let me go back to this. EMAs are Keith. Hey, Flips. What's up, bro? How are you? Nice having you here. Nice having you here. Let's see where you are. And let's see what names do we have here. And let me see where you are, Flips. We have this, can you explain the use of PayPal? It's reaching close to a triangle between long-term downtrend line and current short-term uptrend one-day chart. Want to know to SMA or help? Let's see what PayPal is doing, guys. Let's see one name and we can see a little how each of these guys and names, we can see something different happening. PayPal, let's get rid of this, that it's collect this bar. Let's remove this bar. Let's remove this bar. And removing that bar. So let's remove it all. And I'm just gonna jump to one. Let's see what we got here. PayPal. Who's this? Okay. So I think you're able to unmute yourself, guys, all of you. Look at this. Here, what's happening? You have this close action here with the with the 9, but then look at how it's holding the 50. I like to see the 50 more. Look, buy, you can hold, it's holding, out. You have this move, or if you are here, you're out. You can buy puts all the way here. But if you were doing it on a 5 minutes chart, that's where we trade most of the time. Today, look what we got. This is a simple moving average. You can trade it. I mean, look, we're breaking the 50 down, holding here, holding, and going back up. You know that you can get out anywhere where we try to reach this one back. Then you know that you can, this was a fake out, little fake out. And then you can try to trim out. But then if we change this, let's see the EMAs, you see how it just goes a little bit higher into the price reaction. So it's just going to give us a faster reaction when this crosses here. This is your entry. And then when the price action start going anywhere here, of course, you're going to have another level here that is going to be something like this, that is going to let you know that you need to get out somewhere here. Because if we go to the left, look, I know that this level here was going to be a resistance level, and probably I will have this one too here, because this is yesterday's low of the day. So just by watching this, but I knew that by clicking and crossing over here, I can get into my puts all the way here, and somewhere around here, remember, we don't need to be exact, but somewhere around here, I'm out. And then you can, as I said, you can scalp within the EMAs. You can buy here and try to get out of here, but that's risky. I don't use it that way. I just like to see for longer terms, like longer trades, like see someone else, Hood. Let's see what other names that we had here. Hood, I like this one better. Look, price action, very volatility in the morning, going up, down, then break up, little trim, break down, fake out, and not enough strength to cross any of both, like, and then when you see this separation here, see the separation here, that's your entry point. Then you set up your stop loss anywhere here, and then you let it run. Let it run, let it run, let it run until your crossover here. So you profit out of from here, all this move right here. That's where you make all your money, right there. So that's how you use them, and how do you have a reference. And then you see how they jump back on top of the 9 and then touch again the 50 right there. So those are ways of how do we use them, and how do we use them visually to see what's happening with us, guys. Someone did say about PayPal, there was another one. Not sure if you already did, but if you have a minute, can you go over XOM and Amazon trades from today? Yes, I will. I will show those to you. Let's see. It's Flips gone already? Are you gone, Flips? Yeah. I think he's gone. Seeing him. But let's see, guys. This is where we got the Amazon today. You know what? I'm gonna do something 1 second. I'm gonna stop sharing here. I'm gonna go 1 second. I'm gonna change this. I'm gonna change this. I'm gonna go here. I'm gonna do this. So I'm gonna go to my real charts and not the paper trade, and you're gonna be able to see what happened today. Let me just pull them up. Sorry about the delay for a second here. Boom, boom, boom. Then let me do this. I'll do two. We go with this. We go to privacy. And I can show you this. Perfect. Let me go back to you guys. And thank you for waiting for a second. And let me see what are. And right here and here. Here we go, guys. Sorry about the delay. Are you able to see that screen? Perfect. Here we go. So this is today's.
Yep.
This is what I got today, and this is what normally this is my trade today on Amazon. What I was looking on Amazon, I'm gonna show you the 5 minutes. Look at this. I was looking, I had this, when I let it go down, I got these 2 points to draw a trend, and I knew that this was the overnight high. And I knew that this was my cross from the VWAP. I grabbed calls here. And it was a little bit early because I wanted it to wait here, but once we crossed this VWAP, I grabbed them somewhere around here, and I was waiting for this to go up, hold, and go up here. Here, when I trimmed here one, and I trimmed the other one somewhere around here, but I was a little bit impatient. I didn't draw this line until later on the day, and I was watching other names, and I forgot to do this, and then I saw like how silly from my side that I didn't wait for the move. That it was perfect. I mean, it was great. We were at 89 on the 190s, and look at this. They close here at 140. I enter here again. I didn't call it because I wanted to see if this work, and I trimmed all the way here. But the original move was VWAP. We stay above our level, go up, and break. Look at this is a beautiful bull flag. But this trend line, I never draw it on time. So we got out here, and I said, like, let me protect, the members. Let's not see if we go down here, and let's grab profit. So I grabbed profits on profits. We were green from both trades, and that's why we got out. So that's something that it was my mistake because I wanted to be very careful, but I forgot to do this. And then XOM, look at the XOM did exactly the same. But XOM, I grabbed the calls when we broke this line here. So I got these 2 levels that we were trending, and when we broke this one here on the VWAP, I grabbed calls here, and I got out here. And then I didn't profit of this bigger move, but I got great entry here. I trimmed the first one somewhere around here, and I trimmed the second one around here, and out. And I think a CEO, he held it because he was looking at this line, and he said, yeah, we never broke it, so I'm going to keep it moving. And he got out here. But then with that also comes theta. So he had a little of depreciation, but it was a great move. But this was a little triangle that I was looking for. This was a nice move. As I said, just quick, I'm changing. I know people were saying that, I'm only trade Apple, and I love to trade Apple, but some people don't like it. And this is what I was watching today for Apple. I trade Apple in the morning. I trade this first squeeze here and then out. And I was waiting. Look how I trade this is my chart, normally trading. I got my trends. I'm going to go to let me show you, 4 hours. This is my 4 hours in Apple. I got all my levels. This is my 20 daily SMA. That's where we bounced. That's what the importance of the higher time frames, and that's why I like to have them there. So this was my super huge resistance that told me that we were going to bounce. Then this is the 50 daily SMA. Look where we bounce and when we resisted, and then from there it's when we rocket. We rocketed and exploded here. Now we're holding above. I'm here on the 100 and the 200s. And this is great for me on Apple because I hold shares. I bought shares at 164, 165. I didn't add any more here, but these are telling me you are at a perfect level to stay. And tomorrow I'm going to be looking to stay above. I got here This is my 100 and my 200 in green. I need to hold this and then to have another move upward there. So if I go to my 15 minutes, look how I see my 2 days on the 15 minutes. I got my overnight low, yesterday low of the day. I got my high of the day, yesterday, and low of the day. So, and then this was forming on the pre-market today. So I draw my trend line. I have a bigger trend line that came from yesterday, and I was looking to see if we were going to break this to go all the way high here again. So I was trying to see if we were going to cross this, but look, be what happened here, boom, 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 and we crossed down. And as I said, this is my longer term. Look, here on the other side of my screen, here's where I day trade. So I got my VWAP there, big in purple, but this is where I was looking the price action with my EMAs. And here I go in depth. So I know that the 9 is not my, we're holding, but as soon as I see the 9 crossing the 21, change of trend. Then look, the 9 and the 50 went down, cross again, look at the change of trend. And then we kept, when you see a separation of the smaller time frame with the bigger ones, you know that it's going to keep running. Going to keep running. Look, separation, then try to touch it back, nothing. So when this doesn't cross over, doesn't touch it, you keep your position. You don't, you can leave your runners that, you're safe until your next point of trim or your next profit target. So that's a way how I use this. So I have my left side is going to be for the 15 minutes, 30 minutes, and how to locate myself where we are. But here, guys, here we use I use the EMAs for know my guide on what do I keep my position? Do I stay on it? Where are we going? Are we changing trends? That's the way how I use them. Right. Yes, you can use the 50 to find where to exit the position. You can, every time that if you see it, like for example here, and if I go to the 5 minutes, that's where we should be. Look, if you were buying here puts, you're out here. But if you see a reversal, you get out as on your first ones. If you see that it breaks the 9 and the 20, you're out. I mean, if you're holding, or if you're up here, you can grab them here. And then one of the problems by grabbing calls here is that you have to go through all of this to have a clear path. So it's a lot more difficult than if you were holding something here. So sometimes when grabbing calls in these levels is pretty tricky because you see how much noise they do here, then they hold back here, then they hold back here. So sometimes when you see all these EMAs, I rather not take a position and just wait until we have a maybe clearer path. And then look how beautiful Apple went all the way to this level. And look on the higher time frame, where do we go? Exactly where we closed yesterday or Friday. So this is the move that I was expecting to happen here. I don't know why it happened or what I don't, maybe the news on some of other, sympathy play. What is the strategy you follow? Do you look at the 1 hour and then the Zoom, Sam, 15 minutes, 5 minutes to look for entries? Sam, normally I have here in the mornings, I go to the 4 hours. I go to the 4 hours. I see where we are. So for example, Apple, as I said, I know that let's go to another name that, what name do you like? Sam, tell me a name. What is the name that you're looking right now?
AMD.
AMD. Let's see AMD. So this is AMD right now. What the first things that I see on the longer time frame? Look at the resistance that I have and look where we resisted today. 20 daily SMA. 20 daily SMA. We were not able, look, one resist, this is perfect. I like this. Look, we resisted here. This is the 50. The 20 broke above the 50 daily on the EMAs, on the daily SMA. Remember, daily, exponential, everything, you use them all the same way, but this is a different time frame that you're gonna use for them, but you use them the same way. We're broken the 50 all the way down, and look what we broke here. This is the 100. We're breaking the 100. So this is a fall. We try to break nothing. We try to break it again, nothing. So all of this is telling me so far, if I don't see on the pre-market anything holding above this, I'm going to be very careful. I will not get any calls on AMD tomorrow unless we are above this level. And this is going to be my level here. I can just put it right away and set it up here. This is my level for tomorrow. So this is a 4 hours. What else do I see here? I see that we broke this path, and then we have like a little trend here. I can use, if I want to, I will use another like this, just to guide myself. Little, trend. Then I go to the half an hour. Look how different this looks here. Look, somebody asked me, I think, Bobby, if I use the daily on the shorter time frame, look at the 30 minutes, look at how beautiful this is. Huge resistance, look, never grabbing calls here because of this. If you see this, unless we break it and stay above it, these are going to be huge resistance or support levels. Here, it works as a support, as a resistance. So this is my clear resistance for tomorrow. And then I'm expecting to see, I will do this same thing tomorrow morning at 8 a.m. and I will see if we go up, if we stay down, or if I have to adjust my levels here. But at the beginning, what I can see here is if we go down, this is going to be my price action that I'm going to be looking for. If we go up, this is the price action that I'm going to be looking for. And I might erase some of these levels here. So I just look for the bigger moves. I don't care to scalp like nothing in between. I care about this and I care about this. And if I go to my if I use this and I'm not using, this is what happened to A and AMD. Look at break of VWAP. Look at the cross of VWAP. Cross of VWAP, all EMAs, free clean up here on the shorter time frame. Remember, look at how the longer time frame looks that we're going down, and it's, I'm not getting in them, but look at the shorter time frame. Look, nice pull to this level, resistance, then 9 EMA, 21, VWAP 50. Now we're crossing all of them. Look at how the wide lane crosses all of them and it changes the trend. Then we cross it again. Then when you're here, calls, and you're out. And then we have to see what happened on the aftermarket and where do we hold? Because if I go where my SMAs are, my EMAs are, I'm going to see the same trend. I have the same resistance. I'm going to be here, but I got to be careful on how they move with my VWAP and my current levels. So as I said, EMAs and SMAs are going to be a great reference, but you cannot trade on them by itself. The same thing when we work with the VWAP. We have to use our levels, and they're going to be a dynamic level or reference on our trading. But we need to set, have some help of other levels that we have. Something like this. This is a good reference. We got the level that we trace it here. We knew that if we grab calls, we needed to get out of here. I'm not grabbing calls unless we're firmly breaking this trend and on top of the daily SMA, and then we're staying here. Seeing each other so many times in shorter time frame. Yeah, that's why shorter time frame, it's really tricky, guys. Shorter time frame, it's really tricky, and that's why I advise that you can go into your studies and you can look at all the studies that I have. You can set up your studies to be fairly simple. You can have the 50 and the 200, just the 50. You can do all of this and just have just one if you want, just a VWAP, just the, my God, all of them. Like if you're gonna go just the 9 and VWAP. Look, this is 9 and VWAP, that's it. And here I'm just gonna change the, I don't know why I have the VWAP with a little dotted line here, which I don't like. I just switch it back to print. Here we go. Simple, swing, Now you can see it. Look, easy. 9 EMA, just follow the 9 EMA if you want, and then BWAP, and then your levels. Fairly simple. So it's up to you guys, which one you want to use. EMA and SMA calculating the pre-market after. Are your EMA and SMA calculating the pre-market after hours? They do it by itself. But I use them while on the aftermarket and the pre-market, they go by themselves and they calculate it by itself. AMD, I'm missing the on my time axis, I think is 2. There you go. There you go. So yeah, this is better for a newbie. Yeah. Listen, if you're using one, I would say maybe not, don't use the 9, use the 21 or the 20. Let's add the use the exponential, moving exponential, and use the 21. And we're gonna see why. 21. There you go. Look how easy this is. This is in 1 hour, in the 5 minutes. Look what you need to follow. Swing. BWAP is just gonna let you know in the crossover of BWAP that you need to get in, and you're staying in if you're on top of the 21. And when you break the 21, you trim. And then be careful here. And BWAP is gonna tell you, are we going up or are we going down? When we break down, you could have tried to grab puts here and then get out of here and grab calls again on the break of the 21 and up. But the entry here, look, breaking BWAP, breaking 21, scalp to your level, out. And if you go until here and you touch the EMA, the 21, you're out. So you grab all of this as a profit. So that's really easy. You can just trade with these two guys and your levels. You can perfectly trade with your stat. And the volume, you can always watch the volume. And if you need to have any of these volumes that we have here, those are a script that are available on the script side of the on the tab, on TOS tab. So I think I answered most of the questions, guys. Any more questions? Please we're here to learn. We're here to have any questions. So please feel free to ask if you have any more questions. What's curve bar green? Curve bar. This is the current bar. The current bar, this will tell me, and this bar here, what is the movement of that current bar here? This is a script. No, the script that show you the daily volume here, buy and sell. It's on the TOS tab on the scripts. This is called the buy sell volume script. You send a copy of the link of your presentation in my iPhone. I can see it well. Scotty, it's going to be available tomorrow on the recent lectures tab for everyone to see it again, to copy it again, to have all the information. All our lectures are on our tab in the tab that it's called latest classes and record lectures after trade tools. All our classes are there available. So you can go there and see each and one of them. Great info, thank you again, but we'd like to the presentation. Send me a DM, Scotty, and I will send it to you. Guys, thank you very much. If you have any other question, please let me know. I hope that this was helpful. If you still have any doubts on which one you need to use or how to use them, please feel free to DM me. Feel free to let me know. Feel free to ask me, like, if you're on a trade and you want to try to reference yourself where you need to be or how do you feel more comfortable. I can always, give you another set of eyes and see if you're, what I see. And same things, like as I said, today I made a mistake on Amazon that I never draw this line here and I never saw the bull flag. That's to be honest. I was just so focused on not letting you guys lose money. I was just keeping an eye on my stop loss and not on the trend break. I thought that it was going to break here, and I got disappointed when it broke afterwards, but it was a good trade either way. So thank you guys. Thank you for everything. Any other questions? And I'm gonna close it here. If you still have questions, DM me, okay? Have a great night. Bobby, thank you for being here. Have a great night, guys. Take care.